welcome back to Daffy and Alex show. And as you already know, this is your smart podcast where we talk about finances, insurance, and everything that relates to money. So
Yeah,
we speak of real life events and much more. So today as you already know, anyways, this is Alex, and I'm here with
Daffy.
Daffy. And today again, we have a special guest, as you already know. Your name, please, sir.
My name is Kende Odiebo.
All right.
So he is a financial expert, Odogu in insurance, Odogu in everything finances. And we're having the opportunity of having him here. So we're just going to look at a very wonderful topic. And it is something that a lot of people will really want to know. And today we want to look at pension. Pension is something that is a little bit dramatic.
Of
Understand?
course.
A lot of people want to know what is pension all about, and it's something I really want us to tackle very much. So, sir, without wasting so much time, I would like you to elaborate on the term pension. What is this pension all about? Who does it belong to? Like, who are the people that are involved when you mention the word pension and all
Pension.
that?
All right. Thank you very much for having me, Alex and Edafe, on
You're
this
welcome.
segment once again. The last time I was here, I know that we did a very wonderful job, and kudos to you guys once again. So, without wasting much of our time, I want to start with pension, like you said. Pension are for those. Pension is a periodic payment given to somebody that has served under the federal, state, or private
Sector.
sector
Okay.
that thanks for working and serving us. So this is what is coming as a return. Now, before somebody can be entitled to pension, you must have worked.
Okay.
While you are working, you will earn salary. 8% of your salary is what that will be set aside as your own pension.
Please get that point. How many percent?
8%
Eight
of you that you are
percent.
working
Okay.
is what that will be remitted into your pension account.
All right.
Why those you are working with, federal, state, or private, will be contributing 10% on your behalf into your pension scheme. Do
Okay.
you get? Now, there is what we call old pension scheme and new pension scheme. How does the old pension scheme work? Government of the day, which is government of Nigeria, they are the one handling the pension before now. Now, when there are some irregularities in the dealings and the handling of the pension, that was the reason why the government had to introduce institution that will be saddled with that responsibility to manage the retirees pension fund. Now, before we talked about the institution that the government introduced to manage and maintain the retirees fund, there are retirees in the holding days. How are they earning their pension? They are earning their pension, but it's just as if some institutions, some set of people are siphoning and making the pension fund. Then that was when you see that retirees would line up at the pension office saying that they are here to receive their
Receive their
pension
pension.
for years, for months, and for some period of time.
So
So
bad.
the Obasanjo administration looked into this and decided that we need a more structural body that
To
will be
regulate it.
responsible for the regulatory of pension.
Pension.
That was how they introduced what we call PFC. PFC means what? Pension Fund Custodian. They are just four.
Okay.
They are banks. That means if you as a retiree now, while you're working, that your 8%, and that person that employ you, that is own 8%, 10% rather, is not coming to your own personal account. It's going to your pension account. Who is responsible in creating that pension account for you? It's PFC.
PFC.
So people, retirees should not have the notion that, okay, is this person that is paying me my pension is the one that is paying me directly. No,
It is not
it's the PFC, which is called Pension Fund
custodian.
Pension Fund Custodian.
PFC, pension fund custodian. So I want individuals to learn, people that are not receiving pension yet, like me and you, learn so you can ask your parents questions and
Yes.
put them through. You understand? We are going somewhere. Please follow us. We want you to be part of this journey. So note it, PFC. There are more to come, and we'll also break down the names for you to know the meaning. All right, Mr. Kenny, let's go.
All right. So, as the PFC were established as at that time to receive retirees fund, what happened the next moment? The federal government had to introduce what we call PFA.
Okay.
PFA now means what? Pension Fund Administrator. Do you get? The pension fund administrator were known for just one thing: to educate retirees, to collect and create the pension account for them. Now, these two institutions of government, they are only in existence because the old pension scheme is not what? Is not working. Now, for us to have a perfect system that is working, the federal government now decided to have a PFC, pension fund custodian, to be in possession of the retirees fund, and PFA, pension fund administrator, to be in charge of awareness, education, collection, and the what creation of what pension account. Now, after this was established, the next phase of line is now, how about those that have been receiving pension in the past? They are not into the system. Now, why those that have they are working presently now, how would they be fit into this scheme now? They will fit in. The only thing is they will move their previous fund into their new pension account, and everything will go on smoothly. Now, in doing all these things, this is how pension is being regulated in Nigeria of today. Basically, federal government under the Obasanjo administration felt the way pension is being handled in the past days, years, decade is not properly managed. That was the reason why the federal government feel that there must be a new structure in the pension industry. That was why the introduction of the PFC and the introduction of the what? PFA came into existence. So that is how pension started in Nigeria, and today people have been collecting their pension.
Okay, so I hope you have been following. So we have PFC and we have PFA, and we gave the meaning in the video. So do well to know what PFC does and what PFA does, like Mr. Kenny has told us. So move to the next questions. Next question rather. So tell us the type of pension scheme we have in Nigeria today.
Okay, we have just two.
Okay.
Pension scheme we have in Nigeria is just two. One is called program withdrawal, and the other one is called annuity.
Okay.
Now, these two programs only exist for retirees. If you are still working, you have no business in this. Once you are retired, you have the constitutional right to pick any of these two schemes, which is what? Program withdrawal or annuity.
Okay, so we have just one and two pension scheme in Nigeria, which is programmed withdrawal and annuity. What age is eligible? Like from what age are you eligible to start receiving, pension?
50 years of age, man.
How many years?
50 years of age.
Okay, so from
You are
50
eligible to earn your pension at the age of 50.
Okay, so from 50 years, you're eligible to start earning your pension. And we have Jenny, tell us, what is this program withdrawal? And also, what is this annuity?
All right, thank you very much. Program withdrawal. Now, for our viewers at home, look at this book with me. This book is a pension.
So, Alex, just take it
Yes,
for them to see.
Pension Reform Act 2014.
Okay.
This book usually review every 13 years. They usually review this book. What would they be doing? They will try to look at the rules, laws that govern the pensioners in this book and try to add or remove this. Now, that one will happen every 10 years. So this is still the last one we are using, and it's called the Pension Reform Act 2014 during the Good Luck Jonathan's administration. That was when this book was reviewed.
The most recent one.
Recent one. Now, this book has a perfect definition of what we call program withdrawal. It says program withdrawal is a periodic payment given to retiree for an expected lifespan. Like I told you, while I was explaining how pension came, pension is not something that should stop. It should be a continuous what?
Payment for life.
Yeah. So it should be a payment that you enjoy for the rest of one's life after retirement. Now, program withdrawal is a periodic payment because it comes monthly, quarterly, half yearly, or yearly. That's why it's periodic. Payment given to retiree for an expected
Life.
lifespan. The key word in this definition is what? Expected lifespan. Why annuity means what? Annuity is a periodic payment given to a retiree for the rest of his or her life. That means this annuity is telling us that it is a pension that retirees will collect for the rest of their life. As long as they live, they will keep enjoying annuity. Now, when you now check these two definitions, there are some key words there. One is telling us that for an expected lifespan, in the context of English, check it. Expected lifespan. It means
There is a
after
duration.
there is duration. After you have enjoyed this for a period of time, it's what? It will stop. It's not designed by anybody. That is how this template of program withdrawal is being designed. It's not a man's doing, or that is how the people that wants to design this scheme design it that way. To buttress all we are saying, the most acceptable scheme all over the world mention developed countries. We call it annuity in Nigeria.
Right.
That is the reason why I keep telling that if not for our government that is so sacrosanct and full of politics, that every policies of the government, there must be some level of what, politics in it. The most acceptable scheme for any retiree in the developed countries in the world is annuity. Because it's a payment that they keep enjoying as long as they what?
As long as you live. Oh, that makes it even very beautiful.
Very, very. I have this retirement book for retirees.
This is it.
Part 3, section 7.
Yeah.
That's what reads.
Retirement
So
benefits.
under retirement benefit, that's what we're about to read from.
Yes.
So if you have your pension book, go and make reference to it. Part 3,
7B
section 7B,
and 7C.
retirement benefits.
Yes.
7B and 7C.
It says programmed withdrawal monthly or quarterly withdrawals calculated on the basis of an expected lifespan. Annuity for life purchased from a life assurance company licensed by the National Insurance Commission with monthly or quarterly payment in line with the guidelines jointly issued by Commission for what? For life. Now, what these two is telling us is one will pay you for an expected lifetime and the other one will pay you for life. Do you get? So now, the question I want to ask every one of us seated here, Alex and Edafe, is if you have a parent that is earning pension, which one will you advise your parent to have?
I'll keep my I'll keep my answer to
Answer to
myself
yourself.
actually.
Me, I'll
will-
say my
yes.
own. Me, I would advise annuity for life. Just as it states, one is programmed withdrawal. Just as the name, even as you can hear the name, you can tell that it's programmed, which means it is when the program expires, it stops.
Program stops.
But annuity says annuity for life. So the name alone, I will go for annuity because under program withdrawal, your pension stops. You'll be calling your daughter, send money. Even if I'm sending money, I know I'm sending money for extra. Understand? So when you have the chance of going for something good, why not just go for the best? They say what is worth doing is worth doing well. You are retired, you want to choose the pension scheme, annuity for life is what I would recommend. So for young people listening like me, ask your parents that are receiving pension. Are you under program withdrawal or annuity for life? So it's one thing to serve your country. We all know what today's economy is saying. And you want to now be under a pension scheme, maybe going for program withdrawal after maybe expected years, it stops. Why not go for annuity for life? And you enjoy the fruit of your labor. It's time to enjoy it. So go for the best option. So annuity for life, I am a
And
fan.
let's get your reaction in the comment section. For those of
Yes.
you who let's know if you have any insurance, pension,
Retiree.
retiree, or anybody. Just let us know what
We can
type
help
of
them.
what plans they are running, and if you want us to also help you with further guidance on how to go about it, either the annuity or whatever, we are likely to look at all the comments and now respond to them. Yeah. All right. So what I would like you to, okay, he has explained
The
program
different
withdrawal.
program
Okay,
annuity,
so we would
yes.
like to know the benefits, the
Okay.
different, yes, we would like to know the different benefits for each of them, and program withdrawal and annuity. That
Yeah.
we would like to know the difference and the benefit
Then,
as
so
well too.
you've already stated that program withdrawal is paid for expected time, annuity is paid for life. So let us know, the benefits,
The benefits for
that
them.
differentiates both of
Thank you
them.
very much. Like Adam said, that's the most perfect difference between them. One will pay you for an expected time, and the other one will pay you for life. Now, there are a lot of benefit that comes with one, which doesn't come with one. In the right sense of, if you have been following what I've been saying since, you will have known that one will have more benefit. Number one, the risk of you enjoying pension for life is being managed by the insurance company. What do I mean by this? NICOM only license insurance company to operate or underwrite annuity. Why the PFA I mentioned at the beginning, which is Pension Fund Administrator, they are the only one license to operate program withdrawal. Do you get now? Now, you know that as an insurance person, the reason why you want to involve in insurance is because of the risk that you cannot bear.
Yeah.
So anybody that is doing program withdrawal with the PFA has signed up that if any risk comes, such as what? Riots during the COVID era,
Yeah.
mention it. I'm signing up that I will bear the risk on my own.
That's
Program
the program
withdrawal.
withdrawal. Yeah.
Oh, okay.
Annuity now, it means that anybody that is signing up for annuity is telling them that I want to sign up for this annuity because I cannot bear the risk on my own.
Yeah.
So you have transferred the risk of longevity to the insurance company. You have transferred the risk of the longevity on program withdrawal to yourself alone. That come rain, come shine, oh, whenever there is riot, oh, is my risk. I will bear it myself. Now, let me buttress my point now. Go and check, and somebody should fast check me now. The year at which people migrate from program withdrawal to annuity was during the COVID year. That was 2019, if I'm not mistaken. That was the year there was a big migration from program withdrawal to annuity. What happened? Because program withdrawal is being structured to be an individual risk, is an high risk venture that everybody under program withdrawal were called, texted, email was sent, SMS were sent that if you are earning 58,000 naira before the COVID year, we can't continue to pay you because there was economy what? Went down
It was an
during
economic
that period. So now there must be an adjustment in that monthly pension. Not forgetting the fact that that 58,000 naira is not even enough for that retiree. So some retiree felt pain, felt betrayed, felt that this is not what you told us. So we don't have choice than to move. Immediately they move, they saw that there was a pay rise in their payment under annuity. Do you know why? Which means another benefit of annuity is you receive higher payment than program withdrawal.
Wow.
Why is it like that? It's because retirees fund under program withdrawal is being invested in a pool of fund.
For other program withdrawal
No, annuity.
Talking about annuities.
Annuity. Annuity will pay you higher than program withdrawal. Why are they paying you in annuity higher? It's because all retirees fund will be invested in a pool of fund. That means there is no amount of risk that wants to come. The retirees fixed amount monthly payment is fixed, will be paid. Unlike you saying that Mr. Alex retiree's money is being invested in sugar individually, Mr. Kenny's retiree's fund is being invested in salt individually, is not collectively what invested together. Do you get? So basically, you now look at it that you see that the terms, the high risk venture is program withdrawal, the low risk venture is annuity. Other benefits of these two schemes is this now. Now, two of them has 10
Hold on.
years.
Mr. Ken, let me cut you. So he has given different. So one is annuity pays for life, program withdrawal, where program withdrawal pays for unexpected time. Annuity pays no matter the circumstances, natural disaster, COVID, no matter what affects the government. What affects the government does not affect program annuity rather, because it is only annuity can only be what do they call it? Can only be done by an insurance company,
Yes.
and then annuity pays higher than program withdrawal
In all sense of
in
life.
all sense of life. It pays higher than program withdrawal. So he has given three, if I'm not
Yes,
mistaken,
yes, yes, three.
three so far. So please note this down. So please note it down. Annuity pays for life on like program withdrawal. Annuity pays higher on like program withdrawal.
Low risk venture.
Low risk venture. And no matter the government, whatever is happening in the government, yes, the economy does not affect annuity. So know the difference between annuity and program withdrawal. So let's go on.
Now, there is this particular hulu baloo that is going around. People do say, apology, my people. That's our normal term in the. There is this back and forth going around in among the retiree that both program has 10 years guarantee period. What is guarantee period? Guarantee period means there is a particular period of time that you must enjoy your pension, that you will see that you have exhausted your actual what you brought in, which annuity also has 10 years guarantee period. Program withdrawal has 10 years guarantee period. Now, one now state further that even after you have exhausted your fund, you will continue to enjoy payment because it's been designed for an enjoyment for life. The fourth one we'll be talking about now is the area at which when the guarantee period lapse. For the two scheme I mentioned, two of them has a guarantee period of 10 years. But the benefit of annuity again is as long as the retiree lives, you keep enjoying the pension. Now, for the sake of doubt, retirees should not be so doubtful that but both of them has 10 years guarantee period. Yes, but that 10 years guarantee period is not for the retiree, it's for the beneficiary. What do I mean is if anything happen to that retiree within the first 10 years, the remaining RSA balance will be given to the retiree. That is the reason why we said guarantee of 10 years. That 10 years is not for the retiree because as long as that retiree lives, he keeps enjoying benefit of pension, which is under annuity. But if anything should happen to that retiree, the remaining money will be paid to the beneficiary. But if the retiree has enjoyed the pension 11th year, anything now happen to the after the 10 year, it's 11th year, nothing will be paid to the beneficiary. Now, retiree should come to think of it. Who is supposed to enjoy the pension? Are they the one or their beneficiary? They are the one. So that guarantee period only serve as other benefit for the beneficiary that if this person passes away between the first 10 years, he or she will enjoy that pension. So that 10 years is not for retiree, it's for their beneficiary. So that is that. Now, the process of making claim under program withdrawal is not seamless. The process is so difficult and is exploiting. In what sense? Before you can have access to your fund under program withdrawal, it takes a while. Letter of administration, um, lawyers has come to get you to help you process your letter of administration. And all these things are normal terms that used to deceive our retirees. Letter of administration means what? Death certificate in the context of the meaning. But they will use it as a process where the beneficiary or the next of kin will feel like it's something difficult they can't get. So they will help to introduce you to a lawyer. That lawyer will tell you 10 or 20 or 15% from the RSA balance. Do you get? So they will cough out something to help. Because you are novice in the industry, you will sign the necessary document and say, please help me fast track my mom's RSA balance, my mom's pension balance. Because you are not aware, the lawyer will eat part of the what? The money. Now that will not last more than a year or a year plus before they can get to letter of administration. Because it doesn't come so easy.
Wait, Mr. Kenny, do you mean letter of administration is just death certificate?
That is the context of
And they will
it.
say it like, why can't they just say it is death certificate?
Because program withdrawal is designed to manipulate and exploit what? Retiree. That's the reason why. Let me tell you, one of the functions of the PFA, Pension Fund Administrator, is to educate retiree that program withdrawal is this, annuity is this. But they will not do that.
Okay. Because I've heard a retiree said program will drive even give him his sleep, saying that they will pay him for life.
Thank you.
So it's more like they are brainwashing the retirees than actually
That's it.
educating them.
Now you're talking. They are brainwash. This is a typical example of what we're saying. Check this book, Google check it, and ask the necessary questions when you read those pages I mentioned. You will see where they said for an expected lifespan. Check the meaning in your dictionary. What does an expected lifespan means? There are some templates. There are some statements that once you have them, you will see it in that statement of account. They will write the specific year they are going to use to pay you under program withdrawal. 9 years and 9 months, 10 years and 1 month, 11 years and 3 months. Because they are putting those specific years and months there because they know that you will not exceed this.
So so wait. So it's more like program withdrawal don't even wish you long life.
Long life.
They don't wish their retiree long life.
They have mortgaged the retiree's life to estimate that this retiree retires 60 years old. By 70, he should have exhausted his pension. At worst come to worst, after you have called you that you have exhausted your pension, you will calculate how much you are collecting times 120 years. You yourself will come to a conclusion that you will see truly that you have exhausted your fund.
And there's nothing you can
There is
do.
nothing you can do. What will they happen there? You will start subjecting to begging. They will now tell you now that yes, while you are saving with us, we invested your money and we got return. So if you are collecting 70,000 naira from us before, we cannot pay you 70,000 naira again. We will now start paying you 30,000 naira because you don't have a choice.
You accept
You will accept that kind of money, not knowing that your money is still with them.
I feel anybody would want to go for annuity for life because it not only does it pay higher, it pays you for life. There are actually people that they low risk is involved. They say this is what it is and they keep up with this. This is the same thing that annuity gives you, and I'm sure they still give the legal document
Yes,
that if they don't pay you for life, you can go and sue the company if you want. So annuity for life, if you ask me, is the way to go. And he's saying it not because he wants you to do it with him or because you want him to do it with Alex or because you want him to do it with me. No, you can walk into any insurance company and tell them you want to take annuity for life and they enjoy payment for the rest of your lives. So please and please and please, I hope you are listening, you are following. Children, tell your parents, ask them why are you under, educate them because this is the proof. This is it. This book is written by who?
Yeah, it's written by the Pencom.
See,
Nigerian
federal. This is released from the Federal Republic of Nigeria. It's not a man, not be one person, not one person sat down and wrote it.
Yes.
It is from the state. Pencom themselves, they wrote it.
Jonathan Service, so you can see.
Okay, exactly. So he said, I will munch this part and put. He said, Goodluck Ebene Jonathan, GCFR, President of the Federal Republic of Nigeria, signed June 30th, 2014. So it is from the government itself. Don't allow PFA deceive you. Annuity for life is the way to go. Insurance company, we study from the beginning. Insurance is just passing the risk to the risk managers. So giving your money to them, they are managing your money for you in a pool of fund. So even it's even making sense because okay, you now ask that why would they pay me for life? It's because your money is invested in a pool of fund. There is no how the ocean can get dried. That's the kind of pool your money. The way the ocean is big, water from different places are flowing in there. That is how the pool of fund your money is invested in is. So your money cannot go dry. It cannot run. There's nothing like, and we invested in one thing and the money, the money is even with people that put people that manage risk. That is number one. And number two, it is invested in a pool of funds. So annuity for life is the way to go. Don't be deceived. Don't be naive. Learn. Go online, read. This book you can go and buy it. I think bookshops sell it. Buy it and read. Read.
I would have loved to ask for the recommendation, but from all indication, from the whole comment, the whole interaction, you can see that annuity people have already won. So there is no debate about this. Do you understand? So if you're out there as an elderly person or whosoever, whatsoever organization you're working, and you're almost at that stage of retirement, I think you should get yourself this book, or rather get yourself acquainted with these terms, these information. And if you know somebody who you think is about to retire, recommend this video to him or her so that person can learn. Because if you are not informed, you will be disformed. That is just the thing. So now I will want to say, if I want to ask you another question. So let's say somebody want to acquire annuity, how do they go about it? Like what would they start? How do they start? Do you understand? So that people, I know that obviously we are going to play our part. This is our show, Daffy and Alex. Basically, people who also have questions in regards to how they want to go about this, you guys can comment. Do you understand? You can put, we're going to direct you on how to go. But basically, let's say somebody now that is watching this, I'm like, okay, uh, I like this annuity. This man has spoken well, and I want to kickstart. Or rather, what are those things I should put in mind? How do I prepare myself? What are those things I require? Do you understand? So just kindly just chip in.
All right, thank you very much for that. These are the requirements a fresh retiree will take along. Number one, your retirement letter.
Retirement letter. I want to be echoing it.
Number two, your birth certificate.
Birth certificate.
Number three, 3 month pay slip before retirement.
3 months payment before payslip, right? Okay, before retirement.
Number five, your utility bill.
Utility bill, which could either be NEPA
bill,
or water bill or whatever bill. Yes.
Number five, Abby, or six. Five, your NIN.
So your means of identification. Yes.
Your passport, your voter's card, valid ID card. Number five, your retirement letter. Number seven, six, retirement letter. Appointment letter then. Appointment letter.
Okay, appointment letter.
Yeah. Passport photograph. 7.
Passport photograph.
So these are the requirements that is being required from a fresh retiree that is just coming to enjoy annuity.
Well, that is very wonderful to hear.
Very,
that.
very.
Very wonderful. I want to also chip in something. Although I wanted to actually chip in two things anyways, but I don't know.
I'm not done with it. So for those that have been enjoying program withdrawal, they now decided that they want to move
To annuity.
to annuity.
Exactly. I was even
Do you
about
get?
to
So
say
that's what I want to say now. So for those that have been an existing retiree under program withdrawal, peradventure they now decided that they have the right to also move to annuity. So this is how you go about it. Once you have made up your mind that you are leaving program withdrawal, you will request for your latest statement of account.
Sorry, who is requesting for the latest?
retiree
We request for it.
on the instruction of the broker. You will request it from your PFA.
Okay, from PFA.
So you're requesting for it from your PFA.
The retiree is requesting his statement of account from the PFA, the latest. Once that statement of account is being sent or given to him, that is the remaining RSA balance is what the broker or the insurance personnel or the financial advisor will work on to generate agreement. The same document that is being generated for the fresh retiree is still the same document. Retirement letter, appointment letter, passport photograph, birth certificate, and
Three
then
months pay
3 month
slip,
pay slip,
NEPA bill,
NEPA bill,
NIN,
NIN,
then passport
and
photograph.
passport photograph. So all these are documents that will be needed to generate an annuity agreement from the insurance company of the retiree's choice.
Okay.
So once that has been done, agreement generated will be submitted by the retiree to the PFA.
To transfer the funds.
Less than 24 or 48 hours, that agreement must be signed because that's the latest rules by PENCOM. The
Okay.
PENCOM made us understand that anything
Right.
from June 1st, 2025, anybody that wishes to move
Yes.
to annuity after the annuity agreement has been written and submitted, the PFA
Sign it.
must sign and approve the agreement in less than 2 days. That's 48 hours. Now, who is licensed to do that? The PFA will send the agreement to PENCOM. PENCOM will give acknowledgement immediately, and they will return it back to the PFA,
Wow.
and the fund will be transferred to
To
the
the
insurance
insurance
company
company.
of the choice of the retiree.
No
That's so easy,
stress. No
so
stress.
seamless.
No
That is
stress
what
anymore.
So know your rights. When you go and submit to the PF and you refuse to sign, know
Know
your
your
rights.
rights.
It is their duty to send it to PENCOM, and under at least that's 2 days,
2 days.
1 or 2 days, it is signed and your funds will be transferred and you start receiving your pension instantly. So you can even see that even the government is in support. So they've made because I know it wasn't this seamless before.
Before,
So they've
yes.
made it very seamless.
Because I
So
was also about to mention the fact that what are those things somebody who is currently aware going to do, knowing the fact that earlier, was it in this interview or the previous one we talked about, there are some underground plays like the politics that play around, because I believe some people are highly interested in this program withdrawal that they
yeah,
kind of like tend to frustrate people and not give them the information they need, making them just,
Adam
you
Mandis.
understand, making it just go the straight way of just going.
Alex, you really nailed it on the head in the sense that Nigerian factor always come into place in any policies of the government. What do I mean by Nigerian factor? Some people are aware that annuity is for life, but PFA usually frustrate the process for them by telling them some flimsy what lies, such as
Lies, misleading them.
the financial advisor, the broker that is assisting you to move will earn commission on your money. All these things are what flimsy excuses. They are, when I'm not an agent, am I an agent that is working on the street? I'm a certified broker. Every one of us here, we are certified broker. So basically, we are not of those that usually do that. Second thing is the part of the excuses they give to retiree that we are the one managing your fund while you are still in service. Do you expect an individual to just come and you place your 35 years
Yes,
money that you have? They will place
in
it in
their
his hand,
hands.
and some retirees will look at it that this is an institution of body that is managing my fund. How come I will? Do you get what I'm saying?
But then some of them forget to many of the retired youth people forget to understand that the money is not coming to the individual. For example, I am the insurance broker. Your money is not coming to me. It is not in my account. It is going to the insurance company's account, not my account.
Please tell them.
So that is where they fail to understand. I cannot. If you're ever making the transfer is not going to be made from your PFA to my account. It's going from the PFA to the insurance company's account. So the person does not have. It is a. Mr. Kenny stated it before. It is not allowed. It is a taboo, an abomination
An FA.
an FA, which is a financial advisor, to collect money, no matter, even if it's a 1,000 naira payment you want to
It's
do
wrong.
for a protection plan. It is not allowed. You can be sanctioned, even relieved of your job if you do it. So the money is not coming to the. I'm not the one managing the money. Yes, I am managing. I'm your account officer. I introduced you, but I am not managing your money. Your money is going to the insurance company's account, not my account. So
Thank you,
let's take note
Edafi.
of that.
So to buttress what she has just told us now, the money is not even coming directly to the insurance company's account. It's
Oh,
coming directly to the PFC account.
okay.
Now, the insurance company has an account with the PFC. That is, the PFC will now be the one to approve the money for the insurance company before the insurance company will now credit their
The
annuitants.
retiree,
Do you
okay.
get? So the PFC is a custodian of all retirees' fund, while the PFA and the insurance company are only there to give awareness to the retiree that this is what is right, this is what is wrong. This
Okay.
institution of PFA, they are the one doing this. This insurance company are the one doing this, which is what I'm here to tell that as an insurance person, we are licensed to underwrite annuity. You want to move to annuity, this is what we offer,
Yeah.
which is what I'm doing. Now, part of those things that I want our retirees to do is this. Some of us are always at home, we have nothing doing. We can come online, Google one or two things to get facts. Don't let all this PFA keep deceiving
Brainwash
you,
you.
brainwash you on things you have access to. This rules is for you. This book is not for me. I'm still active in service. I'm not retired yet.
For
It's
you
for you
that
to
are
go through.
retired.
So by the time you go through, then you will have access to information that nobody else will deceive you of. I'm telling you today that I'm appealing to all our retirees out there. If you are fortunate that you have a child that is listening to this video, tell mommy and daddy at home, annuity is the best for them.
The
I
best
don't think this
power.
information is something you should just hear alone. It is something you should
Share
hear.
it.
Share it with somebody who need it. A lot of people are out there, they don't have this information. Somebody is about to do another big mistake again. Do you
Yeah.
understand? So you could help somebody so that somebody is going to get value for the money. You can't have somebody walk through
All the
his
years,
life and at the end
35
of the
years.
day, the person will now come and work and be receiving peanuts or
Peanuts.
do you understand?
And that is
And
definitely painful part. You're receiving peanuts and it's just for your expected
this
time.
period
They
of
will help you
time.
calculate
Do
how
you,
long. That's very
so it's
wrong.
it's very wrong.
Very,
So
very
please
wrong.
help somebody, share it with somebody so that people are really going to get knowledge. And one other thing I wanted to say, although we're talking, this is pension, right? Basically, somebody once mentioned something about business people, business people who
Yeah.
are thinking of
They don't have an
people who
account.
don't kind of like have
Pension
they've not
account.
worked with organizations and they were like kind of like is there any sort of I know that there are some what they call it, insurance organizations that I don't want us to call names anyways or their plans that they have. But is there anything that, let's
Can
say,
be
as a
done for
business
them.
owner, I want to ensure that I continue to stay afloat regardless? Is there anything of that nature on the insurance? Uh,
Thank you very much for that question. I was thinking that we are running over, and that, thank God you just remind me that
Yeah.
yes, there is a scheme for that. Like you said, I don't know of any other insurance company if they have, but as for where I work, we have one for those that work in private institution. For example, now Mr. Gbenga is a businessman. He now decided that I don't have any pension. If I should retire now, my children will take over for me. What's going to be my benefit? He now decided that, okay, at my 60-year birthday, I want to start earning pension for myself. So we can structure, we have a policy where we can place any business minded people, either male or
Or
female,
female.
as long as your age falls within that age, you are good to go, which I think is 75, if I'm not mistaken. If you are 50, you want to earn pension yourself, you are good to
I
go.
think from
Anything
45
from
also.
45,
From 45
from
years.
45
You
years
can
to
start
around
receiving
75 or
pension.
80, you can earn pension for yourself. And it's going to be for life. So the value of what you are bringing in will be a determinant factor
Of
to
what you'll
what
be paid.
you'll be paid every month. And it's going to be for life.
Nobody's left out at
Nobody
the
is
end of the
left
day. Do
out.
you understand?
Exactly.
You're a business owner, you are working in a public sector, in a federal, whatever. There is something for you. You just need to speak and then you'll find it.
You get them.
Yeah. So if you are young like me, like Mr. Kenny, like Mr. Alex, and you're also thinking, how can I even be receiving this pension? So there are two ways. If you're up to the age of 45, 50, 60, you're not sharing about the information now. What you do is you go with a lump sum, 10 million, 20 million, 5 million, tell them this is what I have. I want you to be paying me, calculate it and tell me how much you'll be paying me for life. They'll do that. But if you're young like me, you can, say, okay, I want to pick up a plan, like Mr. Kenny said, their savings plan. You pick up a saving plan and said, I want to save for the next 25, 30 years, 35, depending on the age you are in. You save till then, and when it's time, they take that money and they say, okay, this is what you have, this is what you give it to them and say, I want to be receiving pension. They will calculate and tell you how much they can be paying you, for the rest of your lives. So I think that is it, And also I'm meant to add, one more thing. La 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 la. I forget. Okay. So I know some of you are wondering, how we know so much about pension. You're wondering what is the difference between pension and insurance. Like we've said, pension annuity for life is only underwritten by an insurance company, and we bring you tips on insurance and finance. And of course, we are very inclined, with insurance. That is what we do. You understand? We are financial advisors, insurance, financial planning. So that is how we know about pension. That is how we are so inclined about pension, because we, insurance company, we are the only people that can underwrite, annuity for life. That is how we know so much about, insurance, about pension, annuity for life. So please do well. You can reach out to us, via Instagram, Facebook, the comment section. You want to know more. You want to ask your parents, are you on the annuity for life or pension? You want to know what they are doing. You care about them, or your parents are about to retire. You want them to go for the best. Reach out to us. We'll put you through more information, on how to go about it. Mr. Kenny is here.
Yes, if you want to connect with Mr. Kenny, we can connect you to him. Do you understand? Just comment, whatever it is in the comment section. We'll find him and bring him to you. He's willing to spit out fire, tell you everything, the bitter truth about insurance.
So what we have said today is just a tip of the iceberg. We will do more of this. We will have to be deliberating on this. This is not all.
Yes,
We still have a lot to say, but time is not. And we don't want the video to be so lengthy. But
we
we
will still come and knock on your door again.
of course, yes. So we will. We will, because the section was, you will be seeing Mr. In fact, you will see Mr. Kenny more often. It's going to be a regular visitor, not August visitor. So we have to teach people. These are things we're trying to bring to light. So
People who do not get to call the truth. That people we really like to bring on the show. People who are not scared to call the truth, to tell it, like call the truth by its, how do you call it? By its real name. Do you understand? So this is exactly the kind of person we want. So thank you so much for your time, the energy, and everything. Thank you so much for being on Daffy and Alex show. We are so grateful.
All right, thank you for having me. Our viewers at home, it's my pleasure being on the show today. And I said that I must say this once again, that it's really amazing being here. These are young mind people that wants to make sure that people out there are aware and understand the need why insurance is one of the backbone they should have, and why our retirees need to understand the difference between the scheme on ground. So we have been able to discuss that today, and I want to say this is just the beginning of our time here. Your comments, your reaction, your feedback is much what we need now to know where we need to improve on.
subscribe.
And please do as much as possible to subscribe on Edafe and Alex show. Thank you for having me. It's my pleasure once again. Thank you.
Thank you.
Merci beaucoup.
Yeah.